Thank you. So I'm Gaurav, and I've been running the India Capital Growth Fund for well over a decade now. And I've been doing Indian equities for almost 30 years now. So just to give a perspective of who we actually manage only Indian equities. We are fairly differentiated in the sense that we invest in the mid and small cap segment of the market. Our entire investment team, including myself, are based out of Mumbai in India. We find the mid caps an area where there are a lot of high quality companies which can scale up over time. And our investment trust structure suits it best simply because we can even buy into some relatively less liquid companies and hold them for over a period of time. But to really start, I thought I'll give you a perspective of where India stands today, and what best way than to just compare it with the UK market. I think three things stand out. One is India is a very young population. In fact, this year India's population has exceeded that of China as well. In terms of size of the economy, India is very similar to that of the UK, but the growth rates are much higher. And the third thing is really that India's not much of a leverage economy at all. In fact, the household sector has very low level of leverage. But to give a slightly broader perspective, this is a slide which has ranked various countries. This is a World Bank's data, where various countries have been ranked based on the size of the GDP over different time periods. The orange line is that of India. What you'll see is that virtually every 5 years, India's ranking has been increasing. Today is the fifth largest economy. Last year, it went ahead of the UK. But I think what's more important is that if you see the next decade, India is projected to be the third largest economy, getting ahead of both Germany and Japan. Even if you look at the near term, this is again growth rates forecast by the IMF for some of the large economies of the world. What stands out is that India is now growing at a much faster pace than China as well. So really, the story of India is all about growth. Our own belief is that this growth is not just sustainable, but it's going to carry on for several years to come. So why do we say that? I think to get a perspective, one should go back a bit. And this is that India has come out of a period of a very, I think the economy has really taken a big transition. It's come out of a period of reforms and very painful reforms, I would say. Two things drove these reforms. The first is when the Modi government came to power in 2014, they came with an absolute majority. I think after 30 years, you had a government which had a single party majority. So they were able to take a lot of tough decisions. And I think the second factor is they always looked at India from a 5, 10, 20-year perspective. So really, it was all long-term thinking, and they were very, very focused on execution. So what we saw in these reforms was that the whole focus of the reforms was on transparency, to try and use technology to ease the business environment. And when I say transformative, what we've seen in this period, these 9 years where the government's been in power, is that about 40,000 regulations and compliances have been done away with. And these have covered virtually every sector of the economy. I think the three big ones have been in banking, where an entire new bankruptcy code came into place, in the taxation system, where you had a uniform taxation across the country. It's called the goods and services tax. And I think the third big area was in the real estate sector, which actually wasn't even regulated. And you had a fairly dramatic change in regulations. So it was fairly painful. And why I say painful is that many business houses collapsed. In sectors, say like real estate, almost 60% of developers have disappeared. And this was felt, I think, the most in the banking sector. And if you see the chart on the left, the non-performing assets of the banking sector spiked up all the way to 6% in 2018. Uh, uh, I think there was huge consolidation across real estate, cement, steel. But the banking system, if you've seen since then, has been in cleanup mode, and today it's in a position where it's got this lowest non-performing assets. Banks are very well capitalized and are in a very strong position to lend. If you see the chart on the right, this is what happened to corporate profitability. And this also collapsed simply because many businesses, as I mentioned, collapsed. But even the other corporates really focused a lot on the balance sheets. One of the reasons was that there was so much uncertainty. So it was all about looking inwards. And today, corporate debt in India is down by almost 50% over the last 5 years. But that inflection has also happened, and you're actually seeing the profitability rise, and companies are back into growth and capex mode. Uh, Having said that, I would also highlight that this entire period has also seen India roll out its digital infrastructure. It's called the digital stack. But I'd like to highlight this simply because I would say today India's digital infrastructure is possibly at par or better than any other country in the world. The big difference between India's digital infrastructure and what you see in the Western world is that this is entirely government owned. So it's low cost, high volume. And to give a perspective, it really started with the government launching what is called the Aadhaar, which is a national identity card. It's something like a social security. So when the government came into power, they realized that many Indians, rather millions of Indians who were born in small town or rural India, actually didn't even have a birth certificate. There was no way of them giving any proof of documentation on what the name was, what the date of birth was, or even what the address was. So they created what is called the Aadhaar, which is a 12-digit number. But what it did was it had three recognitions. One was a photograph, one was a fingerprint, and one was a retina scan. So even if you were illiterate, you actually had an identity which could be used for other purposes. And this identity today, 99% of Indians have this identity card. And with this, over a short period of just 2 years, the government forced banks to open an account with every household in the country. Now, why I say forced is because for the banking system, a lot of part of India, especially in tier 3, 4 towns, the cost of setting up branches, opening accounts, it was just not profitable. So they were very reluctant. But through this Aadhaar card identity, your eKYC was done instantly. And now this eKYC is rolled out for virtually every other area of the digital infrastructure in India. Now, once they had the bank accounts and the identity, the government has been rolling out what they call the stack on top of this. So the first one was what is called the United Payment Interface. And it's like a payment gateway, but many of you would have possibly heard of it. It's something like a Visa or a Mastercard, except that it's free of cost. It's peer-to-peer, peer-to-merchant transactions, merchant-to-merchant transactions, and you can do a transaction as low as 2 pence. So today, I would say 45% of global real-time transactions and volumes happen in India. Last month itself, there were 9 billion transactions. That's about 300 million transactions a day. That's the sort of rollout of uh, how it's transformed the economy. So even today, if it's a small vegetable cart vendor or a small shopkeeper, all of them will either have a QR code or you just pay simply through the mobile number. It's as simple. It's a transaction. And on this, you've rolled out other things like account aggregator. There's a whole national database where 300 service providers are providing everything from your license, etc. All of it is on your phone. Uh, and to give an example, what it's done is that the government is now being able to really roll out subsidies, directly into bank accounts, huge savings. So to give an example, when COVID happened, thanks to this Aadhaar card, India was actually able to administer 1 billion vaccines in 9 months flat, simply because they just launched an app and you could book your appointments with the closest hospital. The moment you took the vaccination, the digital service was uploaded. But what they also did was the government identified that section of society which needed some subsidies or cash reimbursements, and so it was very targeted and went straight into bank accounts. So no leakages of money in any form. So really, I think that's one core change that's happened in India is on this infrastructure. But having said, built all this infrastructure, what the government over the last 2 years has been doing is really focusing on growth. I think they believe the hard work is done and now it's all about accelerated growth. So they started by investing in the infrastructure. And the logic was that the private sector was still in a risk averse mode. So the government has to drive this growth. And today, the sort of infrastructure that's happening, the pipeline is about almost 1.8 trillion. This includes projects which are currently under implementation and likely to be implemented in the next 3-4 years. And to give an idea of the scale of what's happening in India, take a city like Mumbai, where I'm based. Today, you have about $50 billion worth of projects just happening in and around Mumbai. This includes a greenfield airport, which should be ready by the end of this year. You're having a 16-mile long bridge across the sea connecting the airport. You have about 14 metro lines being built simultaneously. That's about 330 kilometers of metro network in the city of Mumbai itself. You have a coastal road running the length of the city. You have a greenfield highway connecting Mumbai to Bombay. That's almost 1,500 kilometers of an expressway, and that also should be ready by the end of the year. So that's just Bombay. A similar aspect is happening virtually across the country. Uh, but to really galvanize the private sector, the government also came up with incentive schemes in the last 2 years. They call the production linked incentive schemes. And over these last 2 years, 14 sectors have been identified where they've launched these schemes. And the idea behind this incentive scheme was that in certain sectors where India is a very large market, or where India has a strong manufacturing base and should be levered for exports, the government provided incentives, provided companies invest a fixed amount of capital each year for the next 5 years and also meet incremental revenue targets. And to give you a perspective of how it's changed the environment in the private sector, the first scheme which was launched was for mobile phone manufacturing, for assembling. And the logic behind that was that India has a market of 160 to 180 million phones a year, and 90% were being imported from China. So once the scheme was launched, the transformation you can see is that today 90% of phones are assembled in India. A company like Apple, which never manufactured anything in India, all three of these global suppliers have set up shop. All the iPhone models are assembled in India, and Apple is already exporting iPhones worth $1 billion a month out of India. Uh, Tim Cook was in India 2 weeks back, and his target is that 25% of global manufacturing is shifting to India. So that's the change that's happened in one sector, and I would say 5 6 such sectors have taken off, and that's actually getting reflected in the growth numbers. So it's really not what is expected to happen, but I think we're already seeing this change happen. Credit growth today is trending at 15% plus. It's at a 7-year high. Your indirect and direct taxes last year grew at 20%, both taxes. This is the first time I've seen where tax growth has exceeded the government's own projections. If you see the composite purchase managers index, again, it's at close to highs, both in services and in manufacturing. But I think the most interesting trend which we've seen is what you see on the chart on the right, which is the order book position of the capital goods and infrastructure companies. These are also at all-time highs. So it's really reflective of the change that's happened. And when we speak with these companies, it's not just a bounce back sort of effect. Most believe that this is fairly long term and sustainable in nature. Now, what's exciting us most and why we believe the story is really structural is that finally it all plays it into India's demographics, which I would rate as possibly the best in the world. It's not just the population and the young population, but if you see the chart on the right, that's the per capita income of India. It's just $2,300. It's one-sixth of that of China. So if India is able to achieve this growth, you'll actually see it really go flow straight into consumption, and that's the big story of India. That the capex will really drive consumption going forward. Uh, but I thought I'd just address two pressing issues. And whenever I'm on the road overseas, the big question is how is India responding to the current global environment? And I'd address it by uh, uh, through two areas. The first is this chart, which is actually showing how the Indian currency has behaved versus the US dollar over the last 2 decades. And the reason I put this chart is that uh, India imports 85% of its oil. So whenever there's a global crisis, the first thing that happens is that our currency collapses. And if you've seen last few crisis global events, India's currency depreciated anywhere between 20 to 30% in a short period of time. This time it's been different. In fact, the currency is depreciated just about 11%, but it's had very low volatility. In fact, the currency is actually appreciated versus the sterling and the euro. Uh, the reason behind this is that uh, India today is sitting on huge forex reserves. It's the fourth highest in the world. It's almost $600 billion. So what it's done is that it's given the central bank a lot of flexibility in being able to manage the currency. A lot of this is because you're getting a lot of capital flows, which is long-term capital coming into India, investing in its infrastructure and the general growth story we're talking about. I think the second aspect is inflation. And here I've compared inflation in India versus that in the US, Euro, and UK. The dark blue line is India. And India's inflation today at 4.3% is actually well within the central bank's range of 2 to 6%. In fact, in the last interest rates in India have peaked. The last two policy meets rates were kept flat at 6.5%. And I think the big question is when the interest rates cycle turns and rates start getting cut. Most believe it will start from possibly the October policy meet. I think, but I'd also like to highlight one other point in this, that if you see India's inflation historically, it's actually been pre 2014, it used to be anywhere in the 7 to 10% range. So when inflation spiked to about 7% in this last year, it actually did not have an impact at all on consumption behavior. People have always been used to higher inflation. So behavioral, there was absolutely no behavioral impact in terms of consumption dramatically coming off because of inflation. So given the story, how are we playing it at India Capital Growth Fund? I would say we are fairly well positioned. But just to give you a perspective of how we invest, we're very much bottom up stock pickers. We really don't look at the index at all when we at the benchmark at all when we look at investing. So we have a very high active share position. What we also ensure is when we invest, we are always looking at investing in a company with a holding period of at least 3 to 5 years. Result is our portfolio turnover is very low. And then I would say 67% of our portfolio today we've held for over 5 years. But when we look at a business, I would say the key factor we look at is the management. We're very corporate governance focused. We want dynamic managements who are growth focused. Secondly, we also go into businesses which we find are simple and easy to understand. We find that there are enough opportunities in India. So we are really looking at businesses which are scalable but also predictable and should have some niche which gives it a pricing power or an entry barrier. And finally, very cash flow focused, and we have a threshold return on capital employed below which we will not invest in businesses. So very, very focused on what we want to buy. Our idea is to try and just identify one idea for a month, and we are done. So looking at a portfolio, I really sliced and diced it in various ways, but I would say the core of our portfolio is on this column on the extreme left, which I'd call my consistent compounders. These are businesses, the four stocks I mentioned here, we've held for 8 to 10 years. These businesses are where we actually see earnings growing at 15 to 18% for several years to come. And all we are playing is the earnings growth story. And I would say most of our portfolio we try and position to be consistent compounders. Where we are investing today is really in column two, which is what I'd call a high growth companies. And these are businesses where actually the growth is ranging anywhere between 30 to 50%. But we see this growth sustaining for a few years to come. To give a perspective, a company like Solas BLW, it's an auto ancillary, but it's riding the wave of electric vehicles. It makes very high precision components. So, for example, it makes a product called differential assembly. It's possibly the only Indian company which meets Tesla's 100% requirements, even in its Chinese plants. It has 23 electric vehicle customers across Europe and the US. And when you enter a new platform for these companies, you actually have visibility for the next 8 to 10 years, because that's the time period a platform in the auto company lasts. So a predictable business growing at a very rapid pace. Take a company like Dixon. It's in the electronic manufacturing services space, and I mentioned Apple. But this is like the Foxconn of India. It's a supplier to everyone, to Samsung for televisions, Panasonic for washing machines. Uh, it does lighting for Philips. It does assembly of phones for Motorola, Nikon, etc. So uh, uh, again, if you see its
Gaurav, I'm
market,
sorry. I'm just going to interrupt you there. I'm afraid, Gaurav. We're slightly over time, and we've got quite a few questions.
sure,
Just
I'll
want to get
just rush
time.
through it. So what I'm really trying to say on the portfolio is it's a very it's a portfolio which is really geared for the long term in growth. I'd like to highlight our earnings growth. This is where it's interesting. We have a 35% earnings growth going into next year. This is the highest we've seen, and it's really across portfolio companies. On valuations, it's just at about 18 times. It's below our historical peaks of 21 times, and it's a fairly well balanced portfolio. Uh, on performance, I think our 1, 2, 3 year performance has been exceptional. If you compare it with the larger, broader index of the MSCI, which most funds compare it to, we've outperformed it by almost 50%. I think the big question on India is on valuations. And all I'd say is India is not cheap, but it's really valued modestly above its historical averages of about 18 times. Uh, People consider it expensive simply because emerging markets have collapsed. So the gap between India and emerging markets has widened. But having said that, it's because India has been growing. And what's also changed in India is in this chart, the gray line is the flows into domestic equity mutual funds. So while global funds have been selling out of India, which is the dark blue line, you're seeing almost $45 billion of inflows coming into domestic funds in this last year and a half. And finally, I'll leave you just with just one slide, which is uh, highlighting how India has done over long-term horizons. And why I say that is because people keep saying in China they've not made money despite growth. But if you look at the Indian market performances, which are the blue line, as the India's actually delivered over all long-term horizons, 10 years, 15 years, 20 years, and these are sterling returns. So it's done possibly even better than the US over the last 20 years. Uh, and what we in India Capital Growth Fund are trying to do is just play this growth story. So have a portfolio which delivers on a 15 to 18% compounded growth, and you've delivered the returns. So we've also delivered about 13.5% over the decade since I've been managing the fund. So I'll really end there and leave it for questions.